Today, I look at the pros and cons of holding dividend stocks and compare them to investing in growth stocks. We'll answer questions like: how would an investment in dividend and growth stocks perform over 11 years? What are the benefits of dividend investing? What are the disadvantages of holding dividend stocks? Should you invest in dividend stocks or growth stocks? Let's do it! How would an investment in dividend and growth stocks perform over 11 years? To be able to compare dividend and growth stocks, I have selected two ETFs that are typically of dividend and growth stocks. Both ETFs have similarly sized net assets of around $40 billion. The representative for dividend stocks is the Schwab U.S. Dividend Equity ETF, ticker SCHD, and the representative for growth stocks is the iShares S&P 500 Growth ETF with ticker IVW. Dividend ETF SCHD holds the largest positions in Amgen, Verizon, AbbVie, Broadcom, Merck or Coca-Cola, while ETF IVW, representing growth stocks, holds titles in Apple, Microsoft, Nvidia, Alphabet, Amazon or Tesla. On the chart from 2012, SCHD is in orange and IVW is in blue. At a glance, you can see that the ETF representing growth stocks significantly beats dividend stocks, and this gap is widening over time. So why do people invest in dividend stocks when growth stocks appreciate much faster? What are the benefits of dividend investing? A regular income from the investment. Dividend stocks provide investors with regular income in the form of dividend payments. This regularity can be particularly attractive in times of low interest rates on savings accounts, when finding a stable source of income is more difficult for investors. Dividends can serve as a consistent way to generate passive income. If you are looking for financial security, dividend stocks may be what you are looking for. Stability of companies' earnings and its dividend payments. Companies that pay dividends regularly or have paid dividends for more than 25 years in a row, i.e. dividend aristocrats, are usually among the more established and stable players in the market. The long-term success of these companies can be interpreted as a sign of financial stability. Thus, dividend stocks may be perceived as a safer investment option, which may attract investors looking to connect with established and proven companies. Reinvesting dividends to buy more shares. One of the benefits of holding dividend stocks is the ability to reinvest dividends paid. Investors can use this strategy to buy more shares of the same company or to diversify their portfolio. This flexibility can contribute to long-term growth in portfolio value and strengthen the investor's financial position. Protection against inflation that never sleeps. Some investors prefer dividends as a form of inflation protection. When a company regularly increases its dividends, investors keep pace with inflationary pressures. In an environment of rising prices, dividends can act as a kind of inflation hedge and maintain the real value of investments. However, while there are these positive aspects of dividend stocks, it is important to remember that it has its downsides and it would be unfair not to mention them. Let's go through them. What are the disadvantages of holding dividend stocks? Lower growth in share value. Companies that focus on paying regular dividends may have limited opportunities to reinvest their profits in further growth and innovation. This limited capital flexibility may result in lower shareholder value growth potential compared to growth stocks that reinvest their profits more heavily back into company growth. We demonstrated this with the huge difference in the share price at the beginning of the video. Higher taxation of dividend stocks. One of the significant drawbacks associated with dividend stocks is taxation. Dividends are typically taxed as capital income, and in the US, tax rates for dividends are often higher than rates for capital gains. This tax burden can affect the overall return on investment and reduce the efficiency of the gain for the investor. Dividend yields too low. Some companies may pay low dividends, which can discourage investors seeking regular income. If the dividend level is not competitive enough relative to other opportunities in the market, it is worth considering whether to hold such an investment at all. Limited investment development of the company. From the perspective of the companies themselves, regular dividend payments may limit their ability to invest in new projects and development. Companies may be tied to maintaining a constant dividend yield, which may reduce their ability to respond to changes in market conditions or to invest in strategic innovation. So, should you invest in dividend stocks or growth stocks? I would put it like this. If you want to build wealth for yourself and your family and are willing to hold your chosen stocks for decades, a strategy of investing in growth stocks will make more sense. There is no question that growth stocks appreciate significantly more on invested capital than dividend ones. However, if you're looking for immediate profit, monthly income and a stable cash flow without having to divest shares to realize a gain, dividend investing will be the optimal choice for you. Dividends should not be the deciding factor in evaluating an investment. There is an argument that selecting individual stocks based on dividend payments can be biased. The value of a share may be influenced by book value and discounted future earnings, rather than by the dividends themselves. Personally, I like dividend stocks. I believe that investors' decision whether to invest in A or B stock can be skewed by a mistaken assumption of the advantages of dividend stocks over growth stocks. But that's not the case. Everyone has to find their own take on it. It's like a car. Everyone expects something different from it. Some people want to go fast, but others prefer safety. That's all for today. Have a good time and focus on the right goals in investing.